Very good morning to all of you. So we are back after quite some break, if I'm right? So we covered various chapters, and subsequently you would have covered the rest of the income tax chapters. And one more thing, yesterday was a result day also. Probably some of your friends would have written, got cleared. Some of your friends might have to write again. So if you ask me, that's how this course is designed, right? So don't get scared from what happened yesterday, don't get carried away from what happened yesterday also. So neither of this should happen. So as far as you are concerned, your focus is only on your own self, on how you have to take up the exam for this November. So don't get carried away or don't get disappointed from some of your known results, what happened yesterday. So with that, we'll start with income tax. So you would have almost covered all the chapters, right? So right from your basics to each heads of income, and then clubbing, a set of carry forward losses, deductions, and all of those things. But what is the point in understanding all these? What exactly is the reason that you need to understand all of these? And of course, it's for your examination. But apart, leaving aside your examination, just to understand the income tax law, why did you learn the basics of income tax, the heads of income, the clubbing provisions, the deductions, the TDS, the advance tax? Why did you learn each of this? So typically the point is to compute your taxable income, compute your total income tax payable, and file your income tax return. So this is the ultimate objective for income tax, whatever you have studied in intermediate. So as far as your intermediate concern, your objective is to compute total income, compute tax, and then this is what is primarily the objective is here with your intermediate income tax paper. So that's what it is about. So when you say computation, there are steps involved. And of course, when I say steps involved, I'm going to just refresh whatever you have probably covered earlier. So we'll have some refresher. So each of this, I'll just give a brief understanding of each of these areas. So when you say computation, we are going to carry out steps involved in computation of total income. So what is the first step? The taxability of a particular income differs to different residential status. So it differs to a resident, ordinary resident, not ordinary resident, deemed to be resident, and then non-resident. So for all these four categories, the taxability of income differs, right? When you say a foreign income, it is not taxable in India for a non-resident. It is only taxable if you are a resident and ordinary resident, right? So each of this differs. So when you say differs, the income taxability of a particular income differs to residential status. So that is discussed in residential status. Once you have decided the residential status, now you need to understand in which heads of the income is that particular transaction taxable. For example, there are 5 heads of income, right? So you'll have to classify under each of these sets. For example, you have salary, you have house property, you have capital gain, you have business or profession, and finally you have income from other sources. Now you're going to classify each of this income under that respective head, and then you compute. What do you mean by computation? For example, if you take salary, what do? You calculate house rent allowance, you calculate leave travel allowance, gratuity, your pension, right? So all this differs to each of the heads of the income, and you compute it. Similarly, you have standard deduction. When you take house property, you have interest on loan, 30% municipal tax, computing net annual value. Each of this, what we are talking here, is called computation under respective heads. For example, I myself taught all of you how do you compute salary income. And then we also understood about profit and gains, business or profession, house property. So all this we understood on how exactly it must be calculated. So these are all something we understood. Of course, you would have understood capital gain, income from other sources, from rest of the faculties. Now, this is what you call by computation, computing under each head of income. So that's the next step. The third step is clubbing of income. Now, you compute, but are you taxable only for the income that you are drawing? No. You are also, not even you also, you may be responsible for other people's income, minor children, spouse, daughter-in-law, right? So we saw various scenarios in clubbing of income. So that is the next step. So you need to include, first you calculate your own income, which heads of income, computation under each heads of income. So now you get the income taxable under salary, income taxable under house property, income taxable under capital gain, income taxable under PGBP, income taxable under income from other sources. So after computing, now you club under the respective head. So if the spouse income is clubbed, spouse other sources is clubbed with my other sources, right? So that's what you do. So clubbing of income. After you club the income, you need to set off and carry forward losses. This chapter also you would have covered. So basically there are intra-head set off, inter-head set off. So that is during the current year. And then you carry forward. When you carry forward, it is always intra-head. So only with the same head you can adjust. So the next step is set off and carry forward of losses. So that's what losses is about. After losses, what happens? After losses, what happens? You get your gross total income. So now I have classified, I have computed, I have clubbed, I have adjusted for losses. Now I get gross total income. On this gross total income, I am eligible for Chapter 6A deductions, 80C, 80D, 80E, 80EA, all those sections which should have already studied. So you need to understand the deductions. So that deductions is important. So that is taken into consideration. So you adjust, you deduct the Chapter 6A deductions from your gross total income. With this, what you get your total income. You get your total income. So now I have my total income. With my total income, what should I do? I should apply the specific rates, whatever is applicable for that particular person, for that particular assessee, whatever is the tax eligible, I apply that in the computation of income. So once I've computed the total income, I apply the tax rates on that income. So when I say tax rates, it differs to individuals, HUF. When it comes to intermediate, your most relevant thing is individuals alone. So the individual tax rates is what is important to you when it comes to intermediate examination. So what are the slabs for intermediate? And we'll also understand about what are the options. What are all the options? You have new slab rate, 115 BAC. There is also this concept of whether you can choose between 115 BAC or the regular tax rate. It is up to you. When I say you, it is the assessee. So it is a taxpayer. So it is up to the taxpayer to decide whether to choose ordinary rate or rates under section 115 BAC. Once you calculate that, you will have the tax. On that, you will have to calculate rebate. So when you say rebate, there are rebates. Let's say you have a rebate on your total tax. Up to 5 lakhs, you have a rebate. And then you also have a rebate on earlier concession, that is arrear salary received, advance salary received. So there are various rebates that are applicable. We have seen this in salary chapter about calculating rebate for arrear salaries and other things. So now after adjusting to the rebate, you finally have your tax. Income tax. On income tax, you apply health and education cess. In fact, in case of surcharge is there, you also apply that. So when I say health and education cess, it also includes surcharge. So you also include surcharge. On that, you have the total tax. Now this ends, right? So once you have the total tax, you are done. But if you actually look at it, there is another tax scheme called as alternate minimum tax. So hold on to it for quite some time while we actually understand it, what exactly it is. As of now, what should we understand? It is called as alternate minimum tax. So let's understand the word in ordinary English, normal English, 3 simple terms. Alternate minimum tax. So what does it say? You have a regular tax. Now you are finding out an alternate. You're finding out an alternate. That is something else. You're finding out an alternate. And that should be your minimum what? Minimum tax. So you're finding out an alternate. You're finding out an some other tax, which should be the minimum tax. So you're calculating that. If that is what it is, then we'll see what exactly should be the scenario. So now it might be something odd. Anyways, we'll have a separate understanding in detail on this particular alternate minimum. So for time being, what should you understand? Alternate minimum tax are three ordinary English words. It is alternate minimum tax. You find out an alternate mechanism which will give you a minimum tax that needs to be paid. So that is alternate minimum tax. And then for some income, you might have concession rate, lower rate. It is taxable at 10%, it is taxable at 15%. So you understand that concession rate. If that is there, that needs to be applied also. So in fact, that will be taken care when you are doing here itself. When you are applying the rate, if there are any concession rate, you will also apply that. So that's it is about. Once you have calculated the actual tax payable, the total tax payable, whatever is applicable, on this, you will adjust the advance tax that you have already paid, the TDS credit that is supposed to come back to you, the TCS credit that is supposed to come back to you. TCS is a syllabus in final. So for time being, what you need to understand is only TDS. So the advance tax credit and the TDS tax credit should be taken care. So that gives you the adjustment of tax credit. And then you have tax payable or refundable. So finally, the last step, you get the liability. So this becomes the liability on how much tax that it is due, is payable. So that's what it is about. So this is what it is, right? So now, what happens is, as I told you, when you say computation of total income, there must be a person who's responsible, or what exactly it means. So when you say an individual, it is basically you're computing income of 5x of income. So that is the first thing, computation. If you're a partnership and firm, you need to consider certain things. The remuneration drawn by the partner is not salary income. The salary, bonus, whatever it is called, is not salary income. Similarly, interest drawn from income from your partner's capital is not income from other sources. So this remuneration and interest income of a partner will be taxable under PGBP. So is the entire amount taxable? No. We already saw in business or profession where only a restricted portion, only a limited portion, an allowed portion only is supposed to be an expenditure for the firm, only that will be taxable. So whatever is calculated in the section 40A, 40 section, so that only will be considered as your income. So whatever is being calculated as partnership remuneration, interest income under section 40, that only will be considered in your heads of income. So that's what it is about. Next, whatever is your share of profit is actually exempt. Whatever is your share of profit is not taxable in the hands of partner. Why? Very simple reason. Firm has already paid tax. So if I'm actually getting 100 rupees of income in the firm would have paid, let's say, 30 rupees tax. Now, out of that 100, already my whatever has been paid tax is distributed to me. So whatever you're talking about profit is what is a distribution. So from 100, let's say I have in my firm, there are two partners. Out of 100, I get 50, the other partner gets 50. Now this 50 has already suffered taxation, So there is no requirement of additional taxation with respect to share of profit. That's why it is actually exempt. A member of HUF, similar to your partnership firm, share of profit, similarly here the share of income from the members HUF is exempt because the HUF pays tax. And whatever, if it is an income from impartiable estate, what do you mean by impartiable estate? It is basically which could not be separated. It is one, it is single. You could not actually separate. In that case, the eldest member of the HUF needs to pay tax on that particular income from the impartiable estate. So impartiable estate, the estate which cannot be segregated, which should not be divided. So it is one single estate. Though there are multiple owners, it is considered to be one single estate. So the eldest member pay tax on that. And then if it is a self-acquired property, what do you mean by self-acquired property? If HUF itself has acquired a property which is being converted into a joint family property, so this even then it will be taxed in the hands of HUF. So the income from self-acquired property into a joint family property, that is, it is moving out of HUF, but still it will be taxed under the HUF. That is income from self-acquired property. And when you say club of income, we already studied there could be transfer of income without transfer of asset. Sometimes there will be income from revocable transfer, because irrevocable transfer is not club. And then you have spouse income, minor children income, and income to sons. So all this will be considered under clubbing of income. These are basically relating to individuals. What could be the income? So an individual will be taxed for its own income under the specific heads. And if the individual is a partner in a firm, the share of profit is exempt. The salary received, the interest received will be taxable as business or profession. And then if you are a member of HUF, if that individual is a member of HUF, the share of income is exempt. If it's an income from impartial estate, only it is taxable if I am the eldest member. And similarly, if it is the self-acquired property, which is converted into a joint family property, I will still be liable to pay tax on that. So my portion of income will be taxed under my head. Then clubbing of income, we already saw. So these are the things that we need to consider for computation of total income. So typically in your intermediate thing, how much of this will you be tested from these two listed here is very, very little. So this eldest member of income from impartial estate or this income from self-acquired property into a joint family property is a very rarely tested scenario. So typically what you need to understand is you need to compute as an individual and respective heads, find tax and calculate it. If there is any clubbing, you need to club. If it's anything related to partner, you need to consider. So how much of this will you be actually exposed is very little about these two, income from impartial estate and income from self-acquired property into joint family property. So you can keep that aside. Rest of the things alone, probably you can try to refresh. So that's what it is. We'll move on to the next head. We'll start from one by one. We said there are each steps that we are talking about with respect to this, what do you call, in computation of total income. So that's what we are going to understand right now. So the first step, what did we say? Residential status. So there are residential status. There are 4 residential status for individuals. That is your resident, ordinary resident, not ordinary resident, non-resident, and deemed to be resident. And if it's for everyone else, there are only 2, resident and non-resident. There is no ordinary, not ordinary classifications for other persons other than individuals in HUF. In fact, this deemed resident is only for individuals. It's not even for HUF. So that's what it is about. So for HUF, it's only 3: resident ordinary, resident not ordinary, and non-resident. So that's what it is about. Moving on, the second step, we said you need to compute, classify, and then we said you need to club. So the second step is to classify. Under each bucket, there are 5 heads of income. You need to identify and put it under everything. So for that, you need to identify which heads of income that income will come. So if you say a partner receiving salary, it is not salary. A partner receiving salary is not salary. It is taxed under PGBP. So that's what you're calling as classification. So you need to classify under respective heads of income. Then, as I told you, we need to apply respective provisions. So apply respective provisions to calculate. For example, if you take salary, you take section 10 to understand house rent allowance, leave travel allowance, gratuity, pension that is taxable. So all this is covered under section 10. So you'll have to identify the respective taxable income, and then let's say you'll have to calculate perquisites under section 17, and then you'll have to apply various provisions in identifying each of this income. And finally, you will apply standard deduction, all of these things, right? So that is what you call it as computation. The provisions related to that head of income needs to be applied for that particular income. And if there is any exempt income, it should not be included. So there could be wholly exempt, partially exempt. For things like house rent allowance, it is partially exempt. So we'll have to calculate, depending upon the calculation, you calculate how much is exempt. So that's what it is about. And any allowances, deductions which are eligible should be claimed. For example, your standard deductions, your professional tax paid, all this is an eligible deduction and allowances. So all this you consider and you compute income under the respective head. After that, you club. So whatever is relating to transfer without an asset, transfer of spouse income, minor children, son's wife, all this income needs to be clubbed in the assessee's hands. So that's what you call it as club. So that is what you call it as 3C's. You classify, you compute, and then you club. So it's all about C's. So in computation, this becomes the basic. After that, it is about set off carry forward loss. So basically, there are three types of set off carry forward. That is inter-source, inter-head, and then you have carry forward and set off. So when you say inter-source, within the same source. For example, if you have capital gain, what happens between a short-term capital and long-term capital? What can be adjusted? What cannot be adjusted? So that is inter-source. Then inter-head. What happens? Can you adjust business loss with house property, with capital gain? So that becomes inter-head. So what happens to that? And the third one is, I have losses which could not be adjusted in the current year. What is the procedure to carry forward and set off in the earlier years? If you want me to summarize this in one single table, this is a table which will tell you where your heads of income, how it can be classified. For example, your profit or loss, when you say talk about set off, profit from salary, of course, there will be no loss from salary. So profit from salary, what happens? It can be your house property loss. If you see your house property loss can be adjusted with all heads of income. Only this, there's an asterisk here. There is a small asterisk. I hope it's visible. So basically the asterisk that we are talking about is, it is restricted. When you're adjusting the housing property loss with other heads of income, it is restricted to 2 lakhs. You cannot adjust beyond 2 lakhs with other heads of income. So the maximum loss of house property that could be adjusted with inter-head is basically 2 lakhs. So that's it. When you take business, there are 3 types of business: speculative, special business, and your ordinary business. So speculative is certain transactions like your certain transactions in trading transactions, share trading. So all those are called speculative. And then special business is 35AD, which talks about infrastructure business, So that business, you have certain deductions, like your 100% of capital investment is exempt. So you have certain things in 35AD. So that is another business. And then you have a regular ordinary PGBP business. So if it's a speculative business, you can adjust it only with speculative. If it's a 35AD, you can only adjust with 35AD. But it's a regular business, you can adjust with all these 3, right? So all these 3. So that's what it is about. So similarly, short-term capital loss, you can adjust with both short-term and long-term capital gain. Whereas long-term capital loss, it can only be adjusted with long-term capital gain. And if it's a horse race, only with horse race. And for rest of the thing, if it is a regular business income, it can be adjusted with everything. It can be adjusted with every other head, but for salary. So if it's a business loss, it cannot be adjusted with salary. It could be adjusted with anything else. So that's what your single table that explains the entire carry forward loss. So that's what it is about. So we'll move on to the next thing. So you can just check if you have any doubts in this base topics. I'll clarify it. So next one, we spoke about application of rates, right? So when you say application of rates, you would have already gone through this initially itself. So these are the slabs that are listed here. So you have thing, and then you also have surcharge. When you say surcharge, it is there up to 37%. However, for 111A and 112A, the maximum and the dividend income also. For these 3 income, dividend, 111A and 112A, the maximum surcharge can be only 15%, cannot be more than that. So that's what it is about. Probably, let's leave up dividend. Dividend, I'll explain you. Basically, the short-term capital gain and long-term capital gain. The tax rate itself is what? It's around 10% or 15%. If it's 112A, it is 10. If it is 111A, it is 15%. Now, you can't have a surcharge higher than the tax rate itself. So that's why they're actually restricting it to 15%. So rather than actually trying to mug up or try to remember what exactly it is about, if you understand the concept, why there is a restriction of 15% to this particular heads of income, you will not forget itself. So you need not remember itself because you know the concept, you know why there is a restriction of this 15%. The restriction of 15% is because the tax rate of short-term and long-term capital gain under these 2 sections itself is less than 15%, 15 or less. So that's why there is a restriction of 15. And why on dividend income? If you actually consider this dividend income is a distribution, correct? Distribution from a company. Now the company has already paid tax on the profits. Only then they are distributing this dividend income. So now this dividend income is again taxed in the hands of individual. It is again taxed in the hands of the shareholder. So it's kind of double taxation. It is taxed twice for the same income. We said share of profit in a partnership firm is exempt. Why? Because it is already taxed in the hands of the firm. But distribution of profits from the company is still taxable in the hands of shareholders also. So that's why, since it is actually undergoing additional taxation already, they're restricting it to 15%. So that's the reason why it is restricted to 15%. And when you talk about the slab rates, we have senior citizen, very senior citizen, and there is a circular which says for calculation of the senior citizen and very senior citizen, the important thing that should be kept in mind is including 1st April. Generally, the thing is completed 60 years or 80 years on 31st March, but it should also include 1st April. So if your birthday is 1st April 1960, you're born on 1st April 1962, by 1st April 2022, you turn 60 years. On 31st March 2022, you are actually not 60, but in that night, you're becoming 60 years. So what the circular says is, take this also. So for your exam, for your May and November exam, the relevant key date is 1st April 1962. So if someone is born on 1st April 1962, they are senior citizen. 1st April 1942, they become very senior citizen. Any date after this, that is after 1st April 1962, are not senior citizen for your examination. That is for 2022. For financial year, for previous year, 21-22. And one more thing that you need to keep in mind is the senior citizen or very senior citizen is only for residents. So when you talk about non-residents, it is not relevant. So senior citizen or non-senior, very senior citizen is not relevant. So that's what it is about. So that is with respect to rates. But as we were discussing, there are specific rates, that is special rates, which is given as an optional under section 115 BAC. 115 BAC. So what do they exactly provide? So this 115 BAC is basically an special rate. Now, how do I remember that? I will not, before you understand this, I'll just give you an understanding of how it's basically tested. Remember 2.5 lakhs. What is the basic exemption limit for individuals? It is 2.5 lakhs. You will not forget that, right? So we'll remember that. Now, for every 2.5 lakhs, that is 0.2.5, 2.5 to 5, 5 to 7.5. For every 2.5, 7.5 to 10, 10 to 12.5, 12.5 to 15, and 15 and above. Okay, remember this. So for every 2.5, what is happening for every 2.5? There is an increase of 5%. There is an increase of 5% tax rate. So here it is 0%. Here it is 5. Here it is 10, 15, 20, 25, and 30%. So for every 2.5 lakhs, there is an increase of 5%. So you need not remember, you need not mug up this slab rate. So the slab is structured in a methodical way. So for every 2.5 lakh, there is a 5% increase. So that's what it is about. So 5, 10, 15, 20, 25, 30. So this is the rate. So you could see that for every 2.5 lakh, there is increase. But earlier, in the regular question, what does it say? For the first to 2.5, no. For the next to 2.5, it is 5. Then you double. What is double? 5 becomes 10. So 5 to 10 is the next slab where you are taxed at 20%. So 5 becomes 20%. And then for the next about 10 lakhs, it is 30%. Correct? So that's what it is about. In olden days, it was basically 10, 20, 30. So that's how the rate was. But then this 10 was reduced to 5. So it is typically 5, 20, and 30. So for the first 2.5, no. And for the next 2.5, it is 5. For the next 5, it is 20%, and then it is 30%. So that is the comparison between regular and 115 BAC. So that is about. Now, what should we understand? If there is a special rate, when you say a special rate, when you have a lower tax rate, of course, everyone will choose this lower tax rate. No one will come and say, I wanted to give more money to government. I'll take the regular tax rate and pay the higher tax. Will anyone prefer that? No one, right? None of them will actually prefer that. I still prefer regular rate so that I'll pay higher tax rate. But there's a checkpoint. Government says, this income tax says, see, you are free to use this 115 BAC for both individuals and HUF. You are free to use this rate for both of these persons. So now this is only restricted to individuals and HUF. But I want you to forego certain benefits. So, and taxpayer must compare what happens in regular tax rate without foregoing any benefits, what happened in this new tax rate after foregoing these specific benefits. So what are those benefits that you need to forego? You don't get leave travel concession, HRA. So you don't get leave travel concession, house rent allowance. And anything related to special allowance for office duty is basically taxable. Daily allowance to MP and MLA is taxable. Generally, it is not taxable. But if you are choosing this new provision, it becomes taxable. Then exemption of minor children, that is 1,500 per children, is also taxable. So there is no exemption to a thing. Standard deduction of 50,000 is also not provided. Interest on self-occupied property. So till here it is salary. The benefit that you need to forego from salary. And what about house property? You need to forego interest on self-occupied property. Please remember, it is only on self-occupied property. So if you are let out, it is okay. Only on interest on self-occupied property, there is a restriction. And then you have depreciation, which is called as additional depreciation. Additional depreciation or additional depreciation allowance is not allowed. So when you say depreciation, anything which is additional beyond your regular depreciation, if you're eligible for 15%, that's okay. But anything excess, additional or any other increased depreciation or any other allowances is not allowed. So this comes under PGBP. Same way, scientific research. Any extra deductions in scientific research is not allowed. But technically, whatever is your scientific research expenditure is allowed. When it comes to capital expenditure, you are eligible for scientific research deduction. That cannot be claimed. So scientific research deduction on capital and other things cannot be claimed. And this 3580, investment linked business, cannot be claimed. Expenditure on eligible agriculture products. I don't think that is part of your intermediate syllabus. So this eligible agriculture product generally comes in the PGBP only, but I guess it's covered in the final thing. And expenditure on family pension, the 1/3 of 15,000 which you claim in family pension is basically also not allowed. So your entire family pension becomes taxable. And none of the Chapter 6A deductions eligible, but for employer NPS. There are two categories National Pension Savings Scheme. One is employee's contribution, another is employer's contribution. The employer's contribution is an allowed deduction. That is in subsection 2 of 80CCD. So that is allowed, but the subsection 1 is not allowed. So that's what it's about. And similarly, additional employee cost under 80JJAA. So this is also allowed as a deduction under your section Chapter 6A. So what is allowed? Only two. That is your employer NPS and your additional employee cost under section 80JJAA. So these are the eligible thing, not eligible things. So we have discussed both. So these are all not eligible for exemption deduction. Similarly, when it comes to losses, anything related to depreciation on additional depreciation, if it has been claimed in loss, it is unabsorbed depreciation. It could be carried forward for n number of years. So if you have depreciation loss on additional depreciation, then it is not allowed. Similarly, if you have self-occupied property interest as a loss that is being carried forward, that is also not allowed. So this income, carry forward depreciation specified above, and under the head income from house property, the losses cannot be carried forward. So these are the things that you must forego to claim the new tax rate. So you're not eligible for basic exemptions like leave travel concession, house rent allowance, special allowance, standard deduction. None of this allowed. You're also not allowed for interest on self-occupied property. And then in PGBP, you're not allowed for what? You're not allowed for additional depreciation. You're not allowed for scientific research. You're not allowed for family pension expenditure. And then this chapter 6A deduction. So that is also not allowed. So all this which can be claimed is not eligible. After foregoing all this, if you still feel that this rate is lower, is beneficial to you, then you can opt, then the assessee can opt this particular special tax rate of 115 BAC. So it is optional, and this option can be chose every year. So you can choose this every year. So this year I choose 115 BAC. Next year I can continue my return without choosing 115 BAC also. So it is every year, but there is a small what you call limitations to it. In case if you're having business income, that is profit and gains from business or profession. In case if you have, once you have exercised, it shall apply to subsequent years. Once you have exercised, it shall apply to subsequent years. So which means, let's say I've applied in previous year 2021. Automatically it applies to previous year 21-22 also. Automatically it applies to previous year 22-23 also. So for every subsequent year, it is automatically applied. But if once withdrawn, if the assessee is withdrawing once, for example, in 22-23, I am saying no to this special scheme, then I will never be able to claim this, to opt this, till the time I am continuing with that business income. So till the time my business continues, I am not supposed to claim this 115 BAC during that life period when I have come out of 115 BAC in one single year. So you cannot opt again. But the individual without business income, they can opt either ways. That is, this year is 115 BAC, next year no. The year after that, again you apply. It is free. 1 year you apply, 1 year you don't apply. It is up to you. But if you're having a business income, you have to continuously apply. In case if you're opting out, that is your last year. Subsequently, you can never apply till that business continues. So that's what it is about. And as I told you, for others, it can be applied for any assessment year. For tax deductions, probably they can intimate the deductor saying that I am following new rate scheme. So who's the deductor here? So basically salaried person. For salaried person, the TDS is deducted on average rate. So whatever is actual TDS throughout the year, you calculate that for 12 months and then start deducting it month on month. So the employee must intimate the employer saying that I have started for this current year, I will be applying 115 BAC. So this is the intention of that salaried person. So salaried person must intimate to the director. So that's what it is about. So that is about computation. And then marginal relief. So for marginal relief, this is a small stepwise understanding. So typically you'll have to calculate the tax on the total income under normal rates, and then you'll have to calculate at the base limit on the total income. So you'll have to calculate. So step 3 is 1 minus 2. So step 3 is 1 minus 2. So on this, you'll have a tax amount. Now, you'll have to calculate how much is excess income. So what is the income that is earned excess? So typically, excess income will be the income calculated under 1 and income calculated under 2. So that is calculate excess income. So the difference between 3 and 4, if it is positive, it becomes marginal relief. So marginal relief will be there. So typically, it is reduced. So once you, whatever it is, so typically what we are trying to say is, if your income is 51 lakhs, this is the first step. You calculate tax on this. The second step is tax on 50 lakhs, because up to 50 lakhs, there is no surcharge. So tax on 51 lakhs is first step. Tax on 50 lakh is first step. Step 3 is 1 minus 2. Step 4 is 51 lakhs minus 50 lakhs. So it's nothing but 1 lakh, correct? So 1 lakh is your 4. So step 5 is step 3 minus step 4. If it is greater than 0, it becomes marginal relief. So this is the simple understanding of marginal relief. Hope all of you will never forget this simple understanding. And we saw about rebate. We said it is up to 5 lakhs for resident individuals. So for resident individual, for income up to 5 lakhs, there is no whatever the resident up to 5 lakhs, they can claim rebate on what the income tax payable before higher and education says they can claim the tax, the total tax or 12,500. So typically up to 5 lakhs, your tax will be let's say 12,500 or something. So the entire amount is eligible for deduction. So up to 5 lakhs, typically you may not have any income tax itself. And it is not available on LTCG under section 112A. So this benefit is basically not available under section 112A. So on that, you cannot claim rebate. So that's what rebate is about. Okay, the last thing that we'll try to understand is alternate minimum tax. What is alternate minimum tax? Let's say I have an income of 100. Out of this 100, 80 is taxable income, 20 is exempt income. Okay, exempt income. Now, the income tax says you calculate tax on 80, tax payable. Okay, let's say some amount for just understanding purpose, we'll keep this as 10. Okay, we'll keep this as 10. Now, income tax says you also calculate income tax without giving this exemption. Without giving this exemption, what will be the income? My income will be 100. So you calculate tax on this. Let's say the tax is what, 12 rupees. Okay, we'll keep it as example 12. Now, income tax says since this tax, which is nothing but will be called as alternate minimum tax, that is what will be my tax without giving exemption. So that if higher than this, so if this is greater than, the tax AMT is greater than your regular tax. So if AMT is greater than regular tax, this will be considered as your tax. So this will be a tax and not the regular tax. So this is what is called as alternate minimum tax. We'll understand this. So first thing what we are saying is, if you have income under section 10AA, 35AD or heading C, I'll just strike this off and I'll tell you why I'm striking this off. This heading chapter 6A, yes, it is true. Whatever is written here is not wrong. But this heading C related deduction is applicable for you only in final. So for intermediate, what should you remember for alternate minimum tax? We should only remember deductions under section 10AA and 35AD. If you have profit-linked investment deductions under section 10AA or 35AD, basically on which there is zero tax, you are not taxed on that income. So if you have such income, then government, in order to have a regular flow of income, now I cannot say, let's say my entire 100 is actually exempt. 100, just understand a situation, 100 is income, exemption is also 100. So my taxable income is nil. Correct? So now I'm not going to pay tax at all. So government says, if you're not at all going to pay tax, I get affected. So in order, what you can do is, my cash flow gets affected. So I'll not have a consistent cash flow. So what you can do is, you can calculate alternate minimum tax. And this provision will be applicable only whose adjusted total income is more than 20 lakhs. So this provision is not applicable for persons whose income itself is less than 20 lakhs. And of course, if I'm choosing 115 BAC, this provision does not apply. So not applicable for those who have opted concessional rate under 115 BAC. So on that adjusted total income, the tax will be 18.5%. So in our example, the adjusted total income was 100, correct? So on 100, I calculate 18.5% as AMT. So that's what I actually calculate on 100. So that's what it is about. So I'll calculate flat 18.5% and adjusted total income. So this is what the tax rate is. So what is adjusted total income? It is total income plus whatever exemption income under 10A, whatever exemption under section 35AD, and heading C. When you say heading C, what is applicable for you in your intermediate? It is only this these three sections. So rest of the sections is typically not applicable. So 80JJAA is additional employee cost. 80QQB is royalty and patent. So RRB is royalty and QQB is patent. So these three only is basically eligible for your intermediate. So that's why I said you can basically ignore. So the heading C, the only section that is applicable to you is 80JJA and QQB and RRB. Only these three sections are applicable. So now on this, whatever I paid, let's say I add 100 into 18.5 percentage. It is what? 18.5, correct? Now my regular rate was actually, let's say 10. Now 8.5 is excess tax that I paid. I should only pay 10, but I paid 18.5. So income tax says take credit. So what will be my credit? This 8.5. The 8.5 can be taken as credit in the subsequent year. In the next year, if I'm paying by regular income tax, I can adjust this. I can adjust this tax credit in the next year when I'm actually paying it on regular income tax rather than AMT. So that's what credit is about. So whenever there is AMT minus regular income tax, in our example, it was 18.5 minus 10. And then this can be carried forward up to 15 assessment years. For the next 15 assessment years, you continue to carry it forward. The time you actually pay under regular tax, you adjust this as a credit. So that's what this credit is about. And a credit is allowable even in that particular year. You don't have any deductions or something, or even in that year, if your income is less than 20 lakhs also, it's okay. You can still claim this credit. So credit has nothing to do with the rules that we followed, the rules that we studied to see whether alternate minimum tax is applicable or not. So it doesn't apply. So that's what it is about, this alternate minimum tax. And whatever interest provisions, delayed return, late payment, late advance tax payment, for all these things will apply for alternate minimum tax also. So it's no exception to this particular thing. So that's what it is about. So with this, probably I'm completing the theoretical portion of computation. We saw the steps, we saw each of this. So I'll see if there is any questions and then we'll probably carry it out. Sashwat, it's mandatory to pay advance tax, and if not, then why there is a provision for late fees and interest? See, basically, there are three types of interest, right? 234A, B, and C, correct? Now, advance tax is applicable to you when your tax liability, that is your final tax after taking all TDS, TCS, everything, is greater than 10,000. So only then the requirement of advance tax comes into picture. Similarly, if you are a senior citizen with no PGBP, then there is no advance tax. For everyone else, it is mandatory to pay advance tax. So basically, who has total tax liability after adjusting TDS and TCS, if it is less than 10,000, no tax, no advance tax. Similarly, if you are a senior citizen with no profit and gains from business or profession, then advance tax provision is not applicable. So now what happens is, for everyone else, advance tax is mandatory. For everyone else, advance tax is mandatory. Moment advance tax is mandatory, this automatically comes into picture. 234C comes into picture. And similarly, 234B also comes into picture. So 234C is for delayed payment of advance tax. 234 is delayed payment of taxes. So whether you have advance tax or you don't have advance tax, you must pay your taxes within 31st March. Okay. So you'll have to pay within 31st March. So that is the general requirement. So whenever you are paying these taxes for the delay thing, if advance tax is applicable, you will be levied these two interests. If advance tax is not applicable to you, then B and C will not be applied at all. A is a different story. As far as A is concerned, A is for delayed filing return of income, belated filing return of income. So when you're filing return of income after the due date, 234A is applicable. So for your question, advance tax is mandatory for specific person. For persons whose tax liability is less than 10,000, I think I put greater, sorry. Tax liability is less than 10,000. In that case, there is no advance tax. So in these two cases, there is no advance taxes. So and you are a senior citizen with no PGBP, there is no advance tax. So these are the situations where there is no advance tax as far as you are concerned. So tax liability and these things. A is for belated return. So that's what it is about. Okay. And basic exemption limit for senior citizen is 3 lakhs. The very senior citizen for 80 years and above only is 5 lakhs. Ready. So the basic exemption limit for senior citizen is 3 lakhs. For very senior citizen only, it is 5 lakhs. Rama, could you explain additional depreciation? Rama, see, the additional depreciation is basically in PGBP. If you are into manufacturing business and if you have purchased plant and machinery during the year, you may be eligible for extra 20% additional depreciation. Apart from your current depreciation, for new assets purchased, you may be eligible for additional 20%. So that's what additional depreciation is about. So for that depreciation cannot be claimed in case of if you're opting for 115 BAC. So your regular plant and machinery is subject to 15%. That is allowed under regular tax and 115 BAC also. But if it is additional depreciation, that cannot be claimed under your 115 BAC. So additional depreciation is for new plant and machinery purchased by manufacturing units. So if they satisfy the conditions, they're eligible for additional 20% of depreciation. So that's what additional depreciation is about. Does exemption, deduction, and loss means the disallowance under section 115 BAC? Typically, let's not use the word disallowance, Akash. Basically, it is not allowed at all. So, for example, I'll just give you a small example. My basic salary is in the year is 6 lakhs. Okay. My HRA is 3 lakhs. I have other, let's say, allowances or something for 1 lakh. Now, basically, my income is 10 lakhs. In this, I will less HRA eligible as deduction, right? Let's say I'm eligible for the entire 3 lakhs as deduction. And in this allowance, 1 lakh, let's say I am eligible for 50,000. Some provision, some allowances. So typically my taxable salary will be 6.5 lakhs. Less standard deduction. How much? 50,000. So my taxable salary, that is income from salary, will be 6 lakhs, correct? Income from salary 6 lakhs. So this is the regular provision. Now let's compute under 115 BAC for the same income. You take 6, you take 3, you take 1, 10 lakhs. Not allowed, not allowed. 10 lakhs. Not allowed. 10 lakhs. So your income under your new slab rate is going to be 10 lakhs. Income from salary is going to be 10 lakhs, not 6 lakhs. So that's what it is about. So for 6 lakhs, my tax will be, for the first 2.5 lakh, it will be 12,500. For the next 1 lakh, it will be 20,000. So I'll say 32,500. I hope my math is correct. You can cross check. So for the first 2.5 lakhs, it is 12,500. For the next 1 lakh, it is 20,000. So it is 5% into 2,50,000, 10% into 1 lakh, 20% into 1 lakh, so 20,000. So that is 32,500. But in new slab rate, for first 2.5 lakhs, it is same, 12,500. For the next 2,50,000, it is how much? it is 10%. So for the 10% for the next 2.5 lakhs. So that is from 5 lakhs to 7.5 lakhs. For the 5 lakhs to 7.5 lakhs, I will be paying 25,000. Correct. So this is 2.5 into 5, 2.5 into 10, 2.5 into 15. So for the this is up to 5 lakhs. This is up to 7.5. For the next thing, I'll be paying 37,500. So my total will be 75,000. So if I'm opting new slab rate, I'm going to pay 75,000. Rather, if I opt this old slab rate, I'm only going to pay 32,500. Why? Because I have had the benefit of HRA and other allowances. So that's why we say that you need to compute. So it is not, whatever you are talking here is not disallowance. So these are not disallowance. These are something which are not eligible at all. Disallowance is something which is added and then not allowed. But here it is not about it. It is not at all an eligible exemption or deduction or loss to be claimed. So that is what it is about. So Pooja, alternate minimum tax. I'll give you another example. Let's say I am having a business of 35 AD. Okay. In 35 AD, I have made profits of 250 lakhs. We'll just keep it as 250. Now, in this, I'm eligible for, I have purchased a capital asset. We all know that when you have a capital asset in 35 AD, it is eligible for 100% deduction. So let's say I have purchased an asset. I'll keep this. Okay, I'll just keep this as profit. Okay. So I have an asset under section 35 AD. So now my asset value is 200. So my actual profit is going to be 50. Okay, business profit. So my PGBP under section 35 AD will only be 50 because I have taken benefit of 200. So now what the provision says is, compute tax on 50. Okay, that is 50. So what is on 50? Let's keep a flat 20%, okay, for understanding purposes. Now, on this 50, let's say 20%, it's basically what, 10, right? So my tax on this 50 is 10. So this is regular provision. Okay, this is regular provision. Now, what does income tax says is, it says, what will be your income tax if you are not claiming this? What will be your income tax if you are not claiming this? So they're asking us to compute adjusted total income. Adjusted total income will be 50 plus 35 AD benefit, which is 200. Correct? So my actual profit will be 250. Under adjusted total income. So my adjusted total income will be 250. Now I'll pay 20% on 250. On 250. Not 20%, I'm sorry. The alternate minimum tax is 18.5%. So I'll calculate 18.5% on 250. So what will be that? So I'll say 250 which is 18.5%. I'll just do the calculation. 250 into 18.5% is 46.25. So this is AMT. So if I'm applying alternate minimum tax, my tax is 46.25. If I'm not applying alternate minimum tax, if I'm applying regular income tax, my tax is only 10. The provision says in this scenario, pay tax of 46.25. Take credit of 36.25. How did I get this 36.25? Which is nothing but 46.25 minus 10. 36.25. So this 36.25, I take it as credit. In the subsequent year, let's say there is no 35 AD. My profit is just 100. Tax on this 100 is, let's say, 30. So on this 30, I can take credit. So this is under regular tax in the next year. So this is what we are talking is 23-24. So in this particular financial year, in this particular year, out of this 30, I can less AMT credit. I am eligible for 36.25. So I can reduce my credit to the extent eligible and pay tax, unpaid tax. So that's what it's basically is your credit for. So you can take credit, use credit in the subsequent year and apply it. So alternate minimum tax is another method of calculating a tax without giving benefit to exemptions under section 10AA, your heading C of chapter 6A, all these things, you don't give benefit. You calculate an alternate tax. If that is higher, 18.5% that adjusted total income is higher than the regular tax, you will have to pay tax for alternate minimum tax. So that is about alternate minimum tax. Oh, Pooja, you have understood right now. Zamil, 115 BAC senior citizen slab. No, there is no change for 115 BAC for senior citizen and all. It applies the same. So whatever it is, it applies the same thing. There is no basic exemption. So for everyone, the income for the new slab rate will be 2.5. So there is no senior citizen and all. So for everyone, it becomes, for every 2.5, it is 5% increase. So that's what your thing is about. Okay. So with that, we have just understood the basics of thing. What we'll do is we'll start with solving some problems. So we'll start with solving some problems with respect to these computation. So I'll just see that. So I'll just open up the thing. So hope you're now able to see this thing, this solutions, the problem. So I'll just close the PPT. Okay. So now we'll have this computation and the working sheet alone to understand this. So we'll start with exercise. So these are all your book problems. So probably I'll give some insights on how it is solved and probably some insights on how it has to be worked out during examinations. How do you actually interpret the question? How do you actually prepare for solving the question? Please understand this word, prepare. The question, please take time in reading the question. Prepare yourself to answer the question, to solve the question, and then start solving. So there are 3 stages, right? So you first read. So with respect to these question answers, we can call there are 3 stages. So first I read. So I read the question. Then I prepare. Then I solve. Okay. So only then you solve. So income tax question, whatever is there in your question paper, must undergo these 3 processes to make sure you are eliminating the possibility of errors, eliminating the possibility of making mistakes. So you need to eliminate these things. So what should you do? You should read the question, prepare yourself to solve the question, and then solve. We are going to understand how exactly you must do this during your exam hall, in the exam hall, or how during the time of preparation also. So we'll start with the first exercise, reading. While reading, I'm going to help you prepare to solve. While reading the question, I'm going to help you prepare. We'll just start. Now, I'll also give you one more tip. Every word in the question has 2 possibilities. Totally irrelevant or relevant, right? It's totally relevant or totally irrelevant. So you'll have to give importance to each of the word. Whatever you think relevant must be taken into consideration. So we'll go through and see what is relevant, what is not relevant. Now we are going to read the question. As I told you, while reading, I'll help you prepare in solving this question. Miss Purvi, she's aged 55 years. She is aged 55 years. So why is this important? Age. Age is important to understand the tax slab, which slab to apply. So that's what it is about, is chartered accountant practice. So she is doing a chartered accountant course. She maintains her accounts on cash basis. Books of accounts can be maintained in two bases: cash, mercantile. Why is this important? If it's mercantile, even something which accrues needs to be claimed as expenditure. But when it comes to cash basis, only if it is actually incurred, you need to consider this. So as I read, I take things into my memory. 55 years. So far, Purvi, I need to apply regular slab rate. There is no 3 lakh exemption. It is 2.5 lakh exemption. She has applied cash basis. So if you are reading something on mercantile, on accrual system, we need to ignore that. So this is how your flow of thought should come in while you are reading the question. So they have given our what you call expenditure and income. So now we'll start with the income side. So we'll first start with income side. They have given fees. They have given the breakup as audit, taxation, consultancy. Is this breakup relevant? No. Is this breakup relevant? No. So this is actually, the breakup is actually not relevant. Okay. I will just tell you, I'll not put this. I'll tell you what you need to do when something is relevant. If something is not relevant, just leave it. If something is relevant, I'll tell you what you need to do. So you have income, audit, taxation, consultancy. Now, when you read this, we need to understand the first step we said is residential status. The question itself says that chartered accountant in practice. So, the moment she is a chartered accountant in practice, she must be a resident. So, there is no question about that. Now, once she becomes a resident, we need to classify the income. So, this will be classified under PGBP. That is the 5598, the fees earned. 5598,300 will be classified under PGBP. And then you have dividend received. Dividend received is taxable under what? Income from other sources. It is not PGBP. So it must be removed from this profit. Whatever profit we are talking about, this 928,224 includes other incomes other than business income. So we need to remove that. We need to keep only business income in the profits. We need to remove that. So what should I do? From the profit, I need to remove. Dividend income must be removed. So I'm going to reduce. I'll just explain one more thing and then come back to this. In business or profession, there are 4 adjustments that you need to make. In business or profession, there are 4 adjustments that you need to make. The first adjustment is minus income considered separately. Okay, so income that is not PGBP, that is being considered separately. So I'm removing from PGBP, I'm going to include it separately. So that is the first step, minus. Then income not in P&L, that is not in your profit and loss statement, not in the information given, but it is still an income. So there is an additional information in your question which says this is an income, but it is not part of your profit and loss account. So it is an income, but not part of your profit and loss account. So this is called addition. Next, another addition. It is expenses disallowed. Expenses disallowed. So I'm going to remove from my profits expenses that are not allowed under the Income Tax Act. So expenses disallowed must be added. And then you need to reduce expenses allowed, let's say not part of P&L. So there are expenses which is actually allowed, but it is not part of the P&L. So you need to allow it as an expenditure. So this is what you do from profit before tax. So from profit before tax, the income and expenditure or your profit and loss statement, you take this profit before tax, you reduce income considered separately, you add income to be now considered, business income to be considered now. You need to add expenses that are disallowed. You need to reduce expenses that are allowed but not part of P&L. So these are the 4 adjustments that you need to make. 2 reductions, 2 additions. 2 for income, 2 for expense. 2 disallowances, 2 allowances. Clear? So how simple it is, right? So everything is 2. There's nothing else other than the letter 2, that number 2 that we are talking about. 2 reductions, 2 additions. 2 for income, 2 for expenditure. 2 for disallowance, 2 for allowance. So this is what you need to do. So you need to adjust these 4. So 2 plus 2 is 4, right? So total 4 adjustments for profit from profit before tax will give you taxable PGBP. So while reading this question, I was talking about preparation. So the preparation here is trying to understand what is relevant and what should you do. What should you do to this particular line? So when you say dividend received on shares from X Limited, you need to know that it is taxable under income from other sources. So I need to reduce from my PGBP income. And I will also put you one more thing. It must be added to income from other sources. So I'll put OS. So it must be removed from PGBP. It must be removed from PGBP and included from other sources. You see me marking in the question, right? Whether marking is allowed in your exam while writing your examination, is it allowed? Actually not allowed. But a small mark with a pencil for your own understanding, is perfectly fine. A small mark, you're not going to calculate, you're not going to calculate or do something. You're just going to do only a small minus, a small OS. So very small in pencil, preferably in pencil. You just, while reading the question itself, you start marking the question paper on what you should actually do. So I know now, when I read this dividend, I know that I need to reduce it from my PGBP, from my profits, and consider this under other sources. So there is one minus and one treatment under OS. Next step. When reading this dividend, there is one more word which you need to give importance to. The word gross. Why is this important? The word gross is basically, I'll use some other this for this. So the word gross. Okay, the word gross. So the word gross is important because generally, if it is net, it means it is after TDS. So this 10,524 will be after TDS. So you need to gross up. Because an income is the gross, not after TDS. It is before TDS. So you need to consider the gross income for dividend. So that's what it is about. The importance of the word gross, the relevance of the word gross. So that's what it is about. And when you read this word gross and when you see this amount 10,524, you should also remember that this dividend is subject to TDS because it is above 5,000. So TDS should have been deducted at 10%. So you can actually mark it and keep it in case if the question demands tax demand. So what you can do is, if you go through the end of the question will tell you whether you need to compute income alone or also the tax payable. So now the question also wants you to compute tax payable. So whenever you are realizing each of the word, you should also know whether there will be any TDS on that. So what happens? This number, whatever we are talking about, 10,524 is subject to TDS. So that's what it is about. So once you calculate this, you also need to calculate this TDS under section dividend. So whatever is the TDS should also be computed. So that's what it is about. So now whatever it is, 10% of 10,524 needs to be considered. So that's what it is about. So what do I write? I also write something called, I'll just call it as T to say that TDS should be deducted. So that is the next thing. So I try to say that TDS must be deducted. Correct? So that's what it is about with respect to dividend. So we have now understood the dividend portion of it. So after that, whatever we are calling, after that, the next thing is income from UTI. So this is also not business income. So I need to consider this under income from other sources. Whatever is dividend subject, TDS subject, I need to consider. So there are 3 adjustments I need to do with respect to this particular line item. Next is honorarium. For respect to honorarium or whatever you consider, honorarium relating to valuation of question paper. So what is that? When you say question paper, the value honorarium that you have received, basically whatever you received of 15,800, is it business income or not? It is only for the various institution that you're talking about. This whatever honorarium that you're talking about is like your business income only, because it is part of your other sources. Whatever you have received from practice, the top 3 income, only that should be considered as your business income. Everything else is other sources. So now this honorarium that you have received should be taxed under other sources. So for this also I need to say minus, and I have to consider it under OS. So that's what it is about. And then rent received from the property, it should be removed from your what, business or profession. It should be considered under house property. So it should be considered under house property. So that is what it is about, your rent received. So these are all the income sides. What the adjustment that we need to do with respect to these sets of income. Now coming to expenditure. Salary to staff is an allowed expenditure. Stipend to article is allowed. Article assistant is allowed. Incentive to article assistant is an eligible expenditure. Office rent is an eligible expenditure. Printing and stationery, meeting, seminar, conference, repair, maintenance and petrol of car. Purchase of car, it is a capital expenditure. It's not a revenue expenditure, correct? So it is not a revenue expenditure. So what should I do? I should actually add this to my expenditure, and you should give depreciation. You should give depreciation on this asset. So I'll add a minus. So you need to provide depreciation on this asset. So you're going to add 80,000 from expenditure. It is disallowed. You need to provide depreciation. So provide depreciation on this 80,000. Traveling expenses, municipal tax paid under house property. Municipal tax paid under house property should be considered under house property, not under here. So what I'll do a plus and I'll write HP. So which means I need to consider this in house property also. So while reading the question itself, I'm understanding what should I do in the solution. In the beginning, it might look as if you're taking hell a lot of time, too much of time for one question. But in practice, you'll be able to do this entire thing in less than 5 minutes. In less than probably a couple of minutes should be fine to do this entire exercise. Just mark, just reading and marking. You'll be able to do this in few minutes time. It will not be a big additional responsibility. But please understand, this one exercise will save lot of errors, while actually solving the problem. So please understand, while reading, prepare yourself by marking with pencil a small mark to say that what you need to do while solving the problem. It is only to help you. It is okay to mark in a small manner in a question paper. Now there are allowable information, other information. They have given depreciation for motor car. We have already given here that we need to minus depreciation, right? We have already given here, so it's okay. Value of benefits received from clients during the course of profession. So what it says is, there is some income received in the manner of kind, some benefits received, which is not part of my income. Whatever I received during the course of income, during the course of profession is not part of my, whatever has been included earlier, it is not part of it. So what should I do? I should actually consider this as my business income. It is my business income. So it is not only cash, even any benefits received is also income. So what should I do? I go here and say a plus. Why is a plus required there? While reading this 5598,300, you should understand this must be added. So this must be added. So I put a plus. Where should it be considered? It should be considered as part of business income. So this plus denotes that I must include this as a business income. Next, incentive to article represents amount paid to 2 article assistants for passing IPCC examination. So what does that say? It basically says that they have given some incentive for passing IPCC examination at first attempt. So is this eligible or not? It is something like bonus, right? So whatever is being paid is something like bonus. Bonus is always a business expenditure. So it is an eligible expenditure. So you need not do anything. You need not do any adjustments to things, but you must tell your valuer that you have understood this adjustment. You must tell your valuer, the valuer of your paper, that you have understood this provision. How do you do that? By writing a note. So what I do is I put N. N. What is it N? I'm saying there is no adjustment, but I need to write a note. For what? For incentive. So I go to this incentive and say I need to have a note. So I need to write a note. Next. Repair and maintenance of car include 2000 for the period 1st October 21 to 30th September 2022. So for this entire period, the repair and maintenance is considered. So what is the repair and maintenance period? They have said it is for 1st October 21 to 30th September 2022. Now, tell me, whatever it is, whatever is being followed is actually cash system of accounting. Whatever is actually cash system of accounting means whatever is paid will be considered as an expenditure. Since they are following cash accounting, nothing needs to be done. So all that we need to do is we should just say that since it is cash accounting of system, it is an allowed expenditure. We need not split this period because it is cash accounting system. So that's what it is about. So what do? You do a note for repair and maintenance. So in repair and maintenance, you have a note to be carried out. And then salary includes 30,000 to a computer specialist in cash. In cash for assisting Ms. Purvi in one professional assignment. So 30,000 for one professional assessment is not salary. It is what? It is a consultancy expense. So it is not salary. So from salary, it must be adjusted. So salary to staff, I need to add this. Okay. Apart from that, I need to add this 30 in salary, but it is an expenditure, right? It is an expenditure, the 30,000. But why are we still adding it and not doing anything? Because it is paid in cash. Any expenditure above 10,000 under section 40A2 is 40A3 is not an allowed expenditure. So whatever is being paid above 10,000 in cash is not allowed. So this 10,000 is this 30,000 is not an allowed expenditure. So that's why we are saying it must be added. Otherwise, it's just instead of salary, it is just consultancy expense. It's still an expenditure. But since it is paid in cash, it is disallowed. So I'm putting a plus here, putting a plus in salary to say that something must be added for that. Traveling expense include expenditure incurred on foreign tour of 32,000, which is within the RBI norms. So whatever traveling expenditure is within the RBI norms is basically allowed. You need not do anything because it is within the permissible limit. So since it is for work, in fact, it doesn't say whether it is for work or not, but we can assume that it is for work. So since it has already been accounted in the P&L, we need not do anything. So here it is only a note. If you actually see me, for everything I'm either saying a note or an adjustment because it is very important. You need to give note for each and every line item that is there. So I write N. Medical insurance premium on health of dependent brother and major son amounts to 5,000 and 10,000 respectively, paid in cash. Okay, paid in cash. So the word cash is very important. Why? Because it says 80D, medical insurance paid in cash is not an allowed expenditure. And moreover, health of dependent brother. Brother is not family. Medical insurance is allowed only for family and parents. Family is basically self, spouse, and children, no one else. So this brother is not allowed. And for son also, it is allowed. It doesn't matter whether they are dependent or not dependent. But since it is paid in cash, it is not allowed. So again, here it is only a note. I need not do anything else. She invested an amount of 10,000 in National Savings Certificate. So whatever this 80C that we are talking about, the National Savings Certificate is allowed. Why? Because it is an eligible deduction under section 80C. So that is your 10,000 which is allowed, right? So that 10,000 is allowed under 80C. So this you have to say that it is an eligible deduction. So you can minus. So this has to be reduced from your deductions. And then she has paid 70,000 during advance tax. This needs to be considered. So this also I'll put it as minus because it must be reduced from the tax. So these are all the adjustments that we'll have to make for this particular question. So now what we'll do is we'll take a short break. In the meantime, you can just read through this question again. Of course, if you have your study material, you can read the exercise number 3 in study material and try to do it on your own. Read and prepare. Read and prepare while doing the question itself so that you're not going to make any errors while solving the problem. So that's what it is about. So we'll take a short 10-minute break and then come back and solve this problem and see how exactly it has to be solved. Yeah. So we'll take a short break. Yeah, break. Yeah. So welcome back. I hope you have all read through the question. And as I told you, like we have read and we have prepared ourselves on how to actually add it. So whatever we are going to do right now will explain you in detail how a particular question of computation is typically answered. So in this question, you have a regular computation. You also have to do under section 115 BAC also. So that's why we are saying that there is a process in solving a question. So it's not just you know the provision, you solve it. It's not like that. There is a process in solving the question. So what is the process that we prescribe? It is read, prepare, and solve. So we read, while reading, we were preparing ourselves by marking minutely on what we need to do with respect to each one of it. And then we also spoke about what are the adjustments that we need to make. Now we are going to solve the question. So we have already seen what exactly it is. So let's now solve the question. So what does it say? It is about computation of income, right? It's computation of income of Ms. Purvi. So we'll just start with regular provision. So first we'll start with computation of Ms. Purvi for assessment year 2022-23. So that's the thing that we are talking about, correct? So now in this first thing that we are going to do is we have to compute the income detail. So the format for computation is typically be like you have a particulars column, and then you will have two amount columns, and then a reference column. The notes, wherever we said it is important. So when I say it's important, it is very, very, very important. It's highly critical because notes is something which will help the valuer understand your mindset. What is your mindset when you are very clearly specifying the notes? I have understood the provision. I know what the income tax says. I know what the section says. So that's why I've given you a very clear, precise information in the note on the treatment of a particular transaction. So this note will help the valuer understand that you have understood the provision. You have understood the provision. You have not just replicating whatever you have studied or something. It shows that you have understood the provision to be precise. So that's what we are going to do. So we have a particulars column, we have a reference column, and we have an amount column. So that's what we're going to work out. So we'll have all these cosmetics is also important. And by doing all this, you still have to complete the entire question paper in how much time? 3 hours. So how do you do that? You do that by practice. You do that by practice. When you do if some of you have learned this concept of learning curve. So learning curve is basically when the first time I'm doing something, it takes more time. Let's say first time I'm solving a problem, it takes 45 minutes. Next time when I have a problem, probably 40. Then you bring it to 35, 30, 25. So at a point in time, you will be in a scenario where you could solve the same problem, which you solved first time in 45 minutes. Now you will be able to solve it in 20 minutes. Nothing else has changed. Your confidence, your preparedness only has changed. Nothing else has changed. So that's what you call it as learning curve. So by doing more and more problems, by solving RPP, by solving your previous year questions, all of them will give you more comfort in solving the problem much earlier than what probably one could. So practice only will make you do that. So don't think that it's taking too much of time to solve one problem. Now we are learning. Yes, it takes time. But as you keep learning, you keep improving, it will come down drastically. 45 minutes might come down to 20 minutes. So please understand that. Okay, now let's jump into the solution. So we have written the heading. We have the table ready. We have the table ready of what it is about. Now, what are the heads of income that we were talking about? We had house property, and then you have business or profession, and then you have this other sources. Now, there are two ways to do this. One, in the same table, you compute each head continuously and then solve out. Otherwise, you have a schedule for each of this. You have an annexure for each of this, and then bring only the summary here, the computation, the actual computation, the total of 5 heads of income around. So what we'll do is we'll follow the computation, the summary method. The summary method will give you the first head is income from house property. income from house property. So we'll solve this in first schedule. Then you will have income from profession. We'll solve this in 2. Okay. Now there are only 2 heads of income, and then you add income from other sources also, correct? So income from other sources. So this will do it in 3. So with this you'll get gross total income. Gross total income. Correct? From gross total income, you less chapter 6A deductions. So that we'll keep it as 4. So with this, what do you get? You get your total income. We'll call it as net total income. So this is what you need to compute, and then we'll have to go on with the tax part of it. So now for time being, we'll stop it here. Net total income. And here what we are going to do is the next heading is computation of tax of Ms. Purvi for assessment year 2022-23. So again, I'll have a particulars column. I'll have an amount column. Have a reference column. It might be required, might not be required. We don't know. So what do you do? Draw lines. Okay, so that's it, right? So now what we do is we'll have to calculate the tax under regular income. So it will be tax on total income. You can have a reference if you require. So I'll call it as 5. Then add. There is no surcharge or whatever. So let's say health and education cess. So that will be there. Then you get what? You get tax payable less. We will have to work out TDS and all those things. So whatever the TDS that is applicable, the advanced tax, all those things. So we'll call it as less advanced tax because we said the question had advanced tax. So less advanced tax, less TDS. And with that you get your tax liability. Correct? Tax liability, or what you call it as tax payable. So tax payable. So your tax payable and your income, everything can be rounded off to nearest tens. So with this, let's say you have this ready. Okay. So now this is the structure of the basic solving. So we have the structure ready. So wherever required, we have put schedule. So we'll have to start working with the schedules. So we'll start with notes. I'll not use the word schedule because it's not something like your annual accounts or something. So we'll use the word notes. So notes. Okay. First, income from house property. So income from house property, you have particulars, and let's say you have amount. Okay. Now, this income from house property, we said there are 2 things to be done. One is reduce it from the business or profession, and then another thing is include it to the house property. So the rent received is 85,600, correct? So the rent received is 85,600. So rent. Since there is no what you call standard rent, fair rent, nothing being given, your rent received itself is considered as the gross annual value. So rent, gross annual value 85,600 less municipal tax, right? So you adjust your municipal taxes. So how much is municipal taxes? So now I've considered this, right? So I strike off because I've written it there. And the municipal tax, um, I'm sorry, I'll have to strike in HP because I've considered in house property. I made to reduce it from the thing. And municipal taxes is 3,000. So I'm striking here also. I write 3,000. So my net annual value is 82,600 less standard deduction under section 24A. That is your 30%, correct? So 24. Of course, 24 it is at 30%. So at 30%. So you calculate 30% of 82,600 into 30%. That is 24,780. So it gives you 57,820. So this is taken to the figure here. 57,820 is from your what you call house property income. And now we'll have to go with income from profession. So note 2. Income from profession. So this income from profession, you start with particulars, amount, maybe another amount, and then a reference column. Okay. Okay, so you start with the first line of starting this PGPP is always about your net profit. So it's basically net profit from income and expenditure account. So you use the word net profit. Net profit from income and expenditure account. How much is that? Is 928,224. 928,224. So in this 928,224, I said there are 4 things to be done. 2 and 2. 2 income, 2 expense, 2 allowance, 2 disallowance, 2 additions, 2 reductions. So we'll start with incomes. So we'll first start with incomes that needs to be considered separately, and then we will come to expense part. So first I'll start with less income considered separately. Okay, that's the first thing. So what are the income you have? You have, so this is an addition. The one we have put here is addition. So I'm not getting into this right now. So I'll just leave this right now. So what we have to do is come to this dividend income. So that's the first thing that we have. So I'll have dividend income, dividend from X Limited, right? X Limited, it's 10,524. So now I'm striking this because I've considered 10,524 here. So I'll write it here in the inner column, 10,524. Next, what did we say? Income from UTA, correct? Income from UTA. So what is income from UTA? Income from UTA is 7,600. This also I'm striking off. So 7,600. Okay. So income from UTA is 7,600. And then you add honorarium. So honorarium is 15,800. The last one is house property income, 85,600. Rent income, 85,600. So all these are not income as far as we are concerned. So what do? We just do a total here. So what is the total? 10,524 plus 7,600 plus 15,800 plus 85,600. It is 119,524. So what does this become? Plus minus, right? Sorry. I have to reduce it from 928,224. So I get 808,700. Okay. Next is I can continue with my, is there any income that I need to additionally consider? You have reduced the income. Now you need to add. There was one income, right? Because we said the value of benefit provided from client was not included. So now what I'm doing is I'm adding value derived from clients, not included in income and expenditure account. So that was there, right? So that's why this plus is there. So that is nothing but 10,500. So we come here and add this 10,500. So we'll extend the borders. So we'll extend the borders. Okay. So with that, okay. So with that, what we get? 808,700. You get, you need to add, right? So it is 819,200. So we get that. Now we have completed two adjustments for income. So we have come to expenditure. So what we'll do is we'll come to expenditure, that is add expenditure disallowed. So we need to adjust those expenditure, correct? So what are those expenditure? Whatever we are saying that it is not part of business or it is not allowed. So we'll go one by one. First, we'll start from the heads of expenditure order. So salary to staff, we have added plus. We'll go here below. What is that salary to staff? It was cash, paid in cash. Salary includes 30,000 to a computer specialist in cash. We said it is not allowed under section 40A3 because it is a cash expenditure paid more than 10,000. So what we are saying? We are saying salary to, let's say, consultant in cash under section 40A3. So how much was that? 30,000, right? $30,000. So now I'll strike off this. I'll also strike off this 30,000. Okay, so I've strike off this. Next thing, what they said, we said there is a note for incentive to article assistant. So what we can do is we can just write here incentive to article assistant and just write a note here. So this note will be what? I'll call it as 2.1 because this is note number 2 and there I'm creating another note that is 1. So 2.1. So here I'll put nil. Why? Because it's not disallowed. So in the note, I'll have to write that it is there. I've still not written the note, so I'm not going to strike off this N here. Then we have this repair, maintenance, and petrol of cars. So for that also, we have said there's a note. So that is, so here again, R&M car. I'll call it 2.2 and I'll write nil. Then purchase of car. So that is a capital expenditure. So purchase of car capital. So we'll call it as 80,000. So 80,000 is not allowed. So I have considered the addition. I'm made to provide depreciation. So I'll say 80,000 is provided. So in that, the next one is municipal tax. So that is 3,000. So I'll strike that also. I'll write municipal tax. Municipal taxes 3,000. So now the total will be 30, 80, 110, 113. 113. So if you add 113 to this, it becomes how much? 932, 200, correct? 932, 200. So that's what you get. Now on this, you have to provide depreciation alone. So now, because that is the only expenditure, the last list, the fourth one is less, that expenses that you can allow. So depreciation under section 32. So it is 15%. So depreciation on 80,000 at 15% is what? 8,000 plus 4,000, 12,000, right? So 12,000. So if you add this 12,000, so this 12,000 you get your income from business, income from profession. How much is it? Okay, income from profession is 9,20,200. 9,20,200. So that's what your income from business is. What do? You go to the top, right? 9,20,200. Now you should make sure that you are writing notes because we have not struck up the strike. We have not struck the notes. So what I do is 2.1. So what do I say? 2.1 is about incentive to article assistance. So I say that it is the incentive to article. Incentive is deductible expenditure. Deductible expenditure. It doesn't fall under any specific head between 30 to 36 because 30 and 31 is about repair, maintenance, insurance for plant and machinery and building. 32 is depreciation. And then you have 35, which is scientific research. 36, which is general deduction, your bad debts, your interest, all those things comes under 36. 37 is miscellaneous. So deductible expenditure under section 37. So that's what it is about. And then the note 2 that we were talking about is repair and maintenance of car. So 2.2, you write the note saying that Purvi follows cash accounting system. Hence, the proportionate expenditure for period 1st April 22 to 30th September 22 is allowed. So that's what we space. So that is basically for this period also it is allowed. So whatever it is allowed. So that's the two things that we took about. That's done. Next is any other notes or something we are talking about. So now we have written incentive to paid article assistance, repair and maintenance is done. I have covered incentive. I've covered this. There is one more note, traveling expense we have put, so we can also write that basically. So 2.3, it is assumed that the foreign travel was for professional work and hence allowed. So this can also be given. Since it is already included, we have not done anything. So these are the three things that we said that have to be written as a note. So now we have to consider all the note. That's it. So that is with respect to business or profession. Now we'll have to come to the third working, right? Third, this is for income from other sources. So 3, income from other sources. So particular amount. I think there are only few, right? Because it's basically the dividend and other things. So we'll call it as dividend was there. Then income from UTI was there, right? Only these two. Yeah, so the dividend is other sources 10,524 and 7,600. 10,524 and 7,600. Since there is one more thing, honorarium. Honorarium is 15,800. So honorarium is 15,800. So I have stuck this also, other sources. So now everything is stuck. Depreciation, I forgot to strike. So everything else, after I write it, I strike it off to show that, okay, I've considered it in my question paper. So I'm leaving out nothing. I'm leaving no room for error. I'm almost capturing it in a perfect manner. In every minute thing that has to be taken care is actually being taken care. So that's how you actually have to compute this problem. Okay. So now the total, that is your IFOs, is how much? 10,524 plus 7,600 plus 15,800. That is 33,924. So this 33,924 will also be taken to the top. That is 33,924. So how much do we get? 57,820 plus 920,200 plus 33,924. So that is 10,11,944. So in this 10,11,944, I have to reduce the deduction. So deduction, what is there in deduction? 4 deduction under chapter 6A. Okay, so deduction under chapter 6A. We'll write here. So as again, particulars section amount. Okay, we'll have this as a column. We'll also have a reference column. The first is whatever we saw now is 80D. So there are insurance, 2 insurance to paid. So we'll write thing. Health insurance, brother. Health insurance, son. Correct. So these both will come under 80D. I'll not write the section. I'll straight away write the notes. 4.1, 4.2. So that's there. Then we said NSS, NSC is 10,000. So NSC is 80C, 10,000. So the total will be 10,000. So now you'll have to write 4.1. Brother insurance paid for brother will not be considered under section 80D as brother is not family per section 80D. Okay, that's the thing. And 4.2, insurance on dependent major son is eligible under section 80D. However, as it is paid in cash, it is not allowed as deduction under section 80D. Clear? So I write it very precisely to the point on what I'm trying to convey. So here we have ignored it. Now we are going above and saying that it is 10,000. So it is basically 10 lakh 1,944, correct? 10 lakh 1,944. So in this 10 lakh 1,000, whatever you have considered actually, you can round it off. So I'll call it as round off. It will be 10 lakh 11,940. So 10 lakh 11,940 will be a rounded income. So you round it off to the nearest 10. So now you are calculating tax on this. So we will just write here 5 tax on total income. What I'll do is I'll prepare a common template for basically both. We'll do it this manner. Yeah, particulars is okay. Rate, amount, rate, amount. Okay, we'll keep it this manner. We'll say regular. We'll say 115 BAC. So what happens here is we'll see if we can do it together. Otherwise, we will have to do it as a two different tables. So first 2.5 is nil. Next 2.5 is 5%. So you get 12,500. So we are talking about 10. We'll put the number here. It is 10 lakh 1,940. So for the next 2.5, this is 20%, correct? So that is from 5 lakhs to 7.5 lakhs. 5 lakhs to 7.5 lakhs. For 2.5 lakhs, you get 20%. That is 50,000. Since it is cross 10 lakhs, we can also do next to 2.5. Next 2.5, it is 20%. That is for another 50,000. Okay. And so 2.5, 5, 7.5, 10. So balance. It is here. It is 30%. Correct. Balance is 30%. 2.5, 5, 7.5, 10 balance. So balance is 1,940. So you take 1,940 into 30%. So that is 582. Just 10 lakh 11,944, correct? 10 lakh 1,940. So balance 1,940, you calculate 582. How much did I actually calculate? $1,940 into 30% is 582. 582. So the total 1,12,500 plus 582. So it will be 1,13,082. So you go there, top. $0.82. Add education cess is 14%. 113,082 into 4%. So that is 4,523. The tax payable will be 117,605. Now we'll have to come to the rest of the things. So we said she has paid advance tax of some. So this we have considered. So 70,000 is advance tax. So I take 70,000 as advance tax. And then the TDS. TDS is basically, we said two things has to be considered. That is, one is 10,524 on this. So for 10,524, dividend For dividend, it is basically under section 194, it is 10%. So you get 1052. Then again, TDS on this income from UTI, it is under section 194K. So this is also 10%. If you don't know the sections, it is perfectly fine. Basically, it is any dividend or mutual fund income, all those things. Dividend is 10%. If it crosses 5,000, so here it is 1,050. Here it is for 7,600. It is your this. So basically, whatever you get here is 70,000, 7152, 71. So it is 71,812, correct? So 71,812 is what you consider. So out of 1,17,605, you reduce 71,812. It is 45,793. So you can round it off and say it is 790, but that's okay. 793. So that's what is the tax payable under regular portion. Now, what will happen if you are doing under section? You are doing under section computation of income of Purvi under section 115 BAC for AY 22-23. So what do I do now? Particulars, amount. Okay, I'll just do this. And if there is any reference column. So here, the first thing is income from house property. So whatever I've already considered, that is whatever the house property that is considered, what we will do is we'll do it this manner. So we'll start from the gross total income, because whatever is income from house property is basically allowed. Whatever is if you actually look at it, there is no self-occupied property. So there is no disallowance in income from house property. There is no additional depreciation or scientific research or family planning. So there is nothing in PGBP to be disallowed. And income from other sources, there is nothing. So whatever is taken, that is your income, whatever was your gross total income will be the gross total income here also. That is how much was it? 10,11,944. 10,11,944 less chapter 6A is nil, correct? Because there is nothing that is allowed under section 115 BAC. We can write it as not eligible under section 115 BAC. So whatever is 6A is not allowed. So your total income will be, net total income will be 10,11,944. So even rounded off will be 10,11,940, right? So this income, this 10,11,940 is what is actually your total income. On this, you'll have to calculate tax. So again, we'll go to this 5. So for the first 2.5, it is nil. It is nil. And then you have 5%, that is 12,500. Then you have 10% on the next 2.5, that is 25,000. And then for the next 2.5, that is here it is 2.5, 5, 7.5, 10, correct? So for the next 2.5, it is 15% on 2.5, that is 37,500. If you actually see, 12,500 plus 25,000 is 37,500, because 5% plus 10%. So if you had actually calculated the first 5%, you no need calculator for the rest of the 115 BAC, because everything is just an addition only. So 5% is 12,500, 10 is 25,000, 15 is plus of this. 12,500 plus 25, that is 37,500. And then you get 20%. 20% is 25,000 into 2. 10 into 2. So you get 50,000. Correct? So 5 lakhs, 10 lakhs, 7.5 lakhs. For the 10 lakhs, it is. Where I'm actually writing 5, 10, 15. Yeah. So next is 20%. So you have taken up to 10 lakhs. So for the balance, whatever it is left, that is your balance is 11,940. So for the balance 11,940, it is 20%. So it is 2,388. So it is actually 75,2388, right? So 75 plus 2388. So 77,388. So what you do is you go here, you say it is taxes 77,388, correct? So 77,388. So that becomes your tax. Access at 4%. So 77,388 into 4%. That is 3096. So it becomes 8484. So 8488 less advance tax TDS. So advance tax is 70,000 and TDS we saw TDS that we saw earlier is 1,812. So 1,812. So net tax payable will be 8484 minus 70,000 minus 1,812. So it is 8672. So you can say this is only 8672, whereas your actual tax payable in the regular portion is 30. How much is it? 45,793. So you can say, since tax payable under section 115 BAC is lower than regular tax provisions, the same may be opted. Only thing, however, considering that Purvi is into business or profession, the provisions of section 115 BAC will apply to subsequent years too. So we need to specify this. Only then they understand that you have understood 115 BAC. By just comparing, that doesn't mean that you have understood 115 BAC. So to actually understand 115 BAC, the one important point is if it is business, it is applicable for subsequent years. If you are opting out of 115 BAC in any 1 year, you cannot opt back for the period in which your business is in existence. So that's what is important. So I'll answer some of the questions before we move on to the next question. Yeah. So what about this 30,000? Yeah, Jamil, yeah, the 30,000 should be disallowed, and yes, it has been disallowed here because the 30,000, whatever we are talking here, is 40A3. It is being paid in cash. So more than 10,000, it is being paid in cash. So it is not allowed. Otherwise, it is only a classification. Instead of salary, it will be consultant's expense. So there is nothing else. But since it is tedious, since it is being paid in cash, the entire 30,000 is disallowed. So that's what it is about. So hope everything else is clear in this particular problem. So that is exercise 3 for you. So this is how you generally do. Like, so if you see there is a process in solving. So once there's a process in solving, the read, prepare, and solve, if you're doing this, you don't have, probably there is no room for error. So you don't give up anything. So you will be able to solve answers in the manner in which it is supposed to be solved. So it will be a perfect solution. So that's what it is about. Just keep practicing to get used to this process. Okay, we'll solve one small problem and we'll wind up so that the rest of the problems we can see in the next class. So exercise 5 is basically Bala Murugan has furnished the following information. So he has given the income from textile business, it's basically a loss, and then he has given income from house property, that's also a loss. Lottery winning, so he has lottery winning, that's basically a special income. So that's what is also included. So lottery winning is 5 lakhs. Speculation business income is 1 lakh. So that's there. Income by salary. Please remember the word computed. Whenever you're reading this problem, the word computed is important, because if the word computed is not there, you are supposed to provide standard deduction. Same way for house property, if the word computed is not there, you are supposed to provide standard deduction. So that's what it is about. So income by way of salary, 60,000 is computed, and long-term capital gain is 70,000. Compute is tax liability. What I'll do is I'll do it here itself. So typically, you start with salaries, right? So you start with salaries. I'll do in the so. Computation of Bala Murugan for assessment year. Computation of income of Bala Murugan of assessment year 22-23. So particulars, amount and amount. Okay, so that's what it is about. So the first head of income that has actually been given is salary. So we start with salary. So whatever is being provided is from salary. So you start with salary. Income from salaries. So that is how much was it given? It is 60,000. Less. We need to see what loss we can adjust. Now there is loss from income from house property. So the income from house property loss can be adjusted to the whole heads of income, salary, capital gain, everywhere. So this house property is the first loss that you can adjust. That is 15,000. Correct? Loss from house property. Okay, so it is 45,000. Now just when I tell this, there is also loss from business, but we cannot adjust. Why? Because loss from business cannot be adjusted with salary alone. It can be adjusted with everything else. And the next one that we are talking about, we have already covered house property. So the next head will be business or income. So business income. Business income from regular business, correct? Regular business is, okay, regular business is a loss. Your speculation business is 1 lakh. So you start with speculation. 1 lakh. Your regular business loss can be adjusted with speculation, 3580 regular. Your regular business loss. Only speculation business loss can only be adjusted with speculation business income. So here we are talking about income is speculation, loss is general. So loss general can be adjusted. So what we do? Less loss from textile business. Restricted to the extent of profit. To the extent of profit available. I've already told this, my handwriting is pathetic, so I'm really sorry, I can't do anything about it. So please manage. So I've been telling this quite some time. And since I've been writing for a long time, suddenly I realized it's so bad that how come you all will read. But I keep pronouncing it also. I keep saying it also. So I guess you can manage. So it's basically restricted to the extent of profit available. So I can only use it only to the extent it is available. So the balance 35,000. The balance 35,000 In case if there is any other head that can be adjusted, we can adjust. Otherwise, we need to carry it forward. So now we'll keep it as it is. We'll stop it here. So the business income will be nil. Okay. So we have completed salary, house, property, business. We'll have to come to capital gain. So now income from capital gain. So the income from capital gain is basically 70,000. Correct? So income from capital gain is 70,000. We said business loss, the general business loss can be adjusted to the all heads of income other than salary. So what we do, less loss from textile business. How much is it? 35,000. That is, we'll write it as balance available. Balance available, right? So the 35,000. So this will give 35,000 as capital gain. 35,000 as capital gain. Then you have income from other sources. What is income from other sources? You have lottery. So you have covered this, you have covered this, you have covered this, you have covered this, you have covered this. So the lottery winning, see the word gross. So we'll have to take as it is. If it is net, we'll have to bring it to gross. 30% is TDS rate. In case if it says net, we'll have to backward 30%. So lottery is 5 lakhs. So the total income is basically total income is 45,000 plus 35, that is 80, and then this 5,80,000. So that's what it is. Question wants you to calculate total income and also the tax liability and advance tax obligation. So now tax liability is basically LTCG has a different rate, the lottery winning has a different rate. So we'll say first we'll calculate on LTCG under section 1112. So it is calculated at 20%, correct? It's calculated at 20%. But you have the first 2.5 lakh is exempt, correct? But your entire thing itself is only 35,000. So LTCG under section 12 is within basic limit. So the tax will be nil. Income other than LTCG and lottery. So for that it is that is also it is within basic limit because it's only 45,000, right? So that is also nil. So there is no tax on this also. Then lottery winning. Lottery winning is at 30%. So it is 5 lakhs. So you can't use this basic exemption limit for this lottery winning. It is straight away taxed at 30%. So 30% on 5 lakhs. So it will be how much? 1.5 lakhs. So tax is 1.5 lakhs plus cess at 4%. When you write cess, you'll have to very clearly write it as health and education cess. So it is 4%. So 1,50,000, 4% on that is 6,000, right? So your tax payable, tax liability will be 1,56,000. And of course, in this 1,56,000, there might be a TDS on lottery. We never know. So, but we have come to the tax liability. Only thing is what we need to say is the assessee. For this case, the assessee, whatever is the subsequent thing. For example, in this 1,56,000, if you are considering the TDS, like less TDS at 30%, it would have been 1,50,000, correct? 1,50,000. So then the tax payable will be only 6,000. So which means it's less than 10,000. So we can say that if the total tax liability is less than 10,000, advance tax obligation does not arise. But in case if this TDS under 30% on gift has not been deducted, then the tax payable is 1,56,000. In that case, advance tax liability arises for this particular tax. So that's what we need to say. And we can also write about this basic exemption that we have utilized. We can say long-term capital gain under section 112 and income from salary is eligible to be utilized in the basic exemption limit and hence adjusted. However, with respect to lottery winnings, the basic exemption limit cannot be utilized. Hence, the entire 1 lakh, 5 lakhs will be taxable at 30%. So that's what it is about. So this is about the question number 4. So that's it for the thing. I'll just answer one of the question in the earlier question itself. Repair and maintenance of car. I have not disallowed anything related to repair and maintenance of car. I just have written a note. For example, the repair and maintenance of car is 4,000, which the question says that it includes 2,000 for the period 1st October 21 to 30th September 2022. So what we have written in the note is, we have written the Purvi follows cash accounting. Purvi follows cash accounting. Hence, proportionate expenditure of 1st April to 30th September is allowed. So we are saying the repair and maintenance, though it is for a period beyond 1st April 2022, it is still allowed. So that's what it says. So Himanshu, we have not disallowed repair and maintenance. We have only given a note. What we have disallowed is purchase of motor car. Purchase of motor car is disallowed because it is a capital expenditure. That's why we have disallowed. So with that, we'll wind up today. We'll have one more class on the same thing. So we'll solve more problems. Probably around 4 to 5 problems will be solved in the next class to understand the computation mechanism in a lot more detail. So it will be a step further from what we did today. Read, prepare, solve. So we'll do this exercise subsequently in the next class also. So we'll get used to this method of read, preparing, and solving. So thank you for a wonderful session. See you in the next class. Thank you. Yeah, over. Thank you.